Hey guys, Toby Mathis here, and today we're going to talk about taxes. More specifically, we're going to talk about two different types of ways that you pay your taxes. So the first way is if you owe more than $1,000 of tax in a particular year, you're supposed to be paying as you go. A lot of you guys are W-2 employees, so it gets withheld from your paycheck. But what if you don't have it withheld from your paycheck? What if you owe more money because you have a gig job, or you're running your own gig on the side? Maybe you're an S corp. Maybe you have extra taxes that you're going to owe at the end of the year, and you know that. Then you do what's called quarterly. And so I'm just going to put them down here real simple. We have quarterly, and then we have the annual. Most people are familiar with the annual, right? We know that every year there's a tax time that comes around, and it's April 15th. For 2022, when you're going to file for your 2021 taxes. So this is tax year 20, or this is 2022 as we're sitting here. So we're coming up upon the tax season. That's actually April 18th because we have a weekend involved. All right. So this is why this is really critical. If you had taxes that you had to pay in 2020, there's a good chance you had quarterly taxes that were owed for throughout the year. If you had extra income that came in on a side gig this year and it was more than $1,000 tax of owing, you would have been required to do quarterly taxes during the tax year of 2021. Like you would have paid taxes each quarter. Now, here's the funky thing. Quarterly taxes are done differently than like every 3 months. Everybody thinks it's always 3 months. It's not quite that. So it's January till the end of March. It's April through the end of May. It's June to the end of August, and it's September through the end of December. Quarter 1, 2, 3, 4. That's when those taxes are actually due. So this is what's funky. If you don't pay your taxes, if you skip a quarter or whatnot, you can actually have penalties even if you pay your taxes on time. That's what weird. But there is a get out of jail card that you have, and it's going to depend on whether your adjusted gross income is above 150 or below 150. So I'm going to say below 150 and above 150. Okay. The way it works is they take a look and they say, hey, you're safe no matter what under either one of these if you paid 90% of the year's taxes. So if you paid 90% of your quarterly taxes, you don't have to worry about any penalties with quarterly taxes. So if we divide up into quarters what you were supposed to pay and you paid 90% of that, you're safe. So 90%, and I'm going to use the tax year 2021 just to make it simple. This is what you actually have for the year. If it's less than 150, this next rule is a little bit easier to understand. If it's less than, then you could have paid 100% of 2020 and still avoided the penalties. So let's say that I had in 2020, I owed $20,000. In 2021, I owed $30,000. As long as I paid in quarterly $20,000, I do not have to worry about quarterly penalties because I paid 100% of my 2020 taxes. I paid the same amount I paid in 2020. If I had a tax bill that was less and or more for that matter, and I paid 90% of it, I'm also good. If I'm above 150,000, it's slightly different. Then I have to pay 90% of this year or 110% of 2020. So the last year I filed taxes, and I know that number, let's again say it was 30,000, I would have to pay $33,000 in to not worry about any quarterly taxes. Now I don't have to worry about that. Now we worry about the annual tax amount. And so this takes us all the way up to April 15th. That's all this relates to. So here's how it works. I have to worry about filing an extension. Let's just say that you're like most of our clients where we have investments and things. And our recommendation is that even though the taxes for 2021 are due on the April, it's actually 18th of this year. Even though the taxes are due, We don't know exactly what they're going to be. A lot of times, syndicators are changing their K1s. You might not know your numbers. We recommend that October 15th be your deadline, your actual filing date, but your taxes are due on this date. And we might not know what the taxes are. For all we know, you've had a banner year. And instead of, like, let's say you owed $30,000 in 2020, you could avoid the penalties there by paying 100% or 110% of that amount. But this year, you might be owed, maybe you're going to owe 50. So we avoid any penalties and interest by making sure that we follow this rule, but then we still are going to owe taxes. So here's what my recommendation is for everybody out there. What you do is you take your Q1 payment. See this guy right here, your January through your March? It would be due on April 15th. For this year, April 18th. You take that payment, whatever it would be, that quarter, and you file it with your extension. You make it a payment with your extension, right? And the reason you do that is because, worst case scenario, if I don't owe that tax, you're not asking for a refund. We just reapply it to the quarter, first quarter of 2022. So you're making that payment knowing the money's gone. It's going to stop you from having any penalties for 2021. And we still have our safe harbors that we can still go into for 2022. So first quarter 2022 tax, I'm just going to call it first quarter, whatever that amount would be, it's just the dollar amount. We're going to apply it to our 2021 extension. So we're going to file an extension. We're going to make a payment. It's going to be whatever that quarterly it was. So let's just go back to, we had $30,000 in 2020 in my example. So we'd cut that up into quarters. So it'd be $7,500. You would pay a $7,500 check just to be safe, to make sure that you did it. Now, if you know what amount of revenue, extra revenue you did, you created, and you have a good idea of how much income you're going to have, then we can estimate how much to pay. But as just a matter of course, like if you don't know and it might be more and you're a little bit worried, make that first quarter payment, but apply it to your extension. File it with your extension, apply it to your 2021 taxes so that it is applied to the 2021 taxes, so you don't have any penalties, because we still have time to be in one of these safe harbors for 2022. I hope that makes sense to you. So those of you guys who are out there who are used to doing quarterly payments, all we're doing is saying, hey, you know what? Let's just make a fifth quarterly payment for our last year, just in case we owe. And we know that that money's gone. It's either going to be applied to my 2021 taxes to make sure I have no penalties, or it's going to be applied to my 2022 taxes. Either way, that money's gone to go to the tax man, and it's going to prevent me from having any penalties. There's no late filing penalties because we filed an extension. There's no late filing penalties over here. We're in a safe harbor so that we can avoid the penalties that come from failing to make a payment when it was due. But this is the most attractive mechanism that I can think of, and that our tax team can think of, to make it easy for you if you're going into a tax season and you're worried about underpaying and you don't know what to pay. I would just say, make another quarterly payment, whatever it was for last year, make another quarterly payment in the first quarter, but instead of applying it to the first quarter of 2022, apply it to your extension for your 2021. If it ends up being that you didn't need to do it, we will apply it to your first quarter of your 2022 taxes. So for those those of you out there who are doing your extensions, this is an easy methodology. When in doubt, just make whatever the first quarter would be, but apply it to your extension payment, and therefore you can avoid getting hit with any penalties.